Hi, this is Zak Mir from Zak's Traders Cafe with a look at some bulletin board hero stocks on Wednesday the 17th of February. Starting off with 88 Energy, and here you can see it's been quite a painful retreat, probably a predictable retreat from the top of this formation, the triangle formation, heading up to 3 pence. Support logically would be around the old June 1.18 pence resistance. So far that has been the case. The low yesterday 1.2 pence. Could be an overshoot down towards the 20-day moving average at 0.83 pence at the worst. Otherwise, a rebound between 1 and 1.18 pence is probably likely here, or at least support coming in at that zone. Red flag on something going wrong, and a more full-blooded retreat would be below RSI 50 as well as the 20-day moving average in terms of the rebound, perhaps up to 2 pence as a best-case scenario target at this stage while we hold above a penny. Next up is stock which is obviously which has been less dramatic, let us say, Digital Globe Services. Here bounce off the 50 pence level and closing back above the 200-day line at 56.57 pence and the 50-day average at 60 pence. That leaves us to conclude that while there's no end-of-day close back below 50 pence, we are looking at a recovery situation here. Possible push up towards the top of this triangle formation at 85 pence over the next 1 to 2 months, especially while we hold above the 50-day line. And there's no end of day close back below the 200-day moving average. Next up is a stock which has been all over the place in the recent past. Internet Q, interesting configuration at the moment with the bounce off the 20-day moving average at 131. Sort of inverted head and shoulders formation with this right-hand shoulder here based around the 120 level, at least while there's no breakback below that. We are still looking at a best case scenario target as high as 204 pence at the 200-day moving average. Initial target there, the initial February resistance at 166.43. Next up is a stock which I haven't looked at that much over here on the bulletin board heroes, but looks like it's getting ready to push to the upside, bounce off the 50-day moving average at Optala Resources at 5.82 pence, and especially while we hold above the floor of this rising trend channel at 5.5 pence from the summer of last year, looking for a 10 pence target over the next month or so. Be cautious on the shares, maybe wait for an end-of-day close back above the 200-day moving average at 7.29 pence. Sac Oil is next, and here the interest is provided by the way there's been this extended basing along the floor of this rising summer 2015 price channel. End of day close above the 200-day moving average at 1.2 pence the second time this month. Hopefully it'll be second time lucky for the bulls to retest the October resistance at 2.2 pence over the next 4 to 6 weeks. Finishing off with the lap of honour at UK Oil and Gas. It's a shame that yesterday's update was a day too late, but at least the charting worked there. In fact, we've been calling the stock higher from this area just above the 50-day moving average at 1.31 for quite some time, so there was never really any sell component here. RSI was also leading the shares up with an uptrend line from November. But anyway, the situation at the moment is that we should have support coming in towards the former 1.5 pence resistance zone. Ideally, no end-of-day close back below the 200-day moving average at 1.67 pence, ahead of a possible retest at 2.75 pence at the top of a rising August trend channel.